Good Tuesday morning, everyone, and greetings from the windy and, well, actually it stopped, and what was the torrential rainy city of Chicago. Last night, we went up what I call the Sears Tower, and they call now the Willis Tower. So it was certainly interesting to go to the top in a driving rainstorm with apparently a tornado watch. So it's fun nonetheless, took some good pictures. And then those of you who know me really well, I had back-to-back nights of my favorite deep dish pizza. In any case, I had a couple of minutes to spare before meetings begin today. So I wanted to answer a question, and I'll probably do some more because that's just how I roll. I had a bunch of emails and questions regarding energy prices, something I've spoken about most of the year. I certainly wrote about it in my 2021 Fearless Forecast. So I wanted to at least address what's become a common question. And this is why I usually pick either a video or I devote a blog to it. When I get emails or text or calls or meetings in person and a lot of people ask the same question or want comments on the same topic, I figure it must be a lot more pervasive than I thought. So with that, I'm going to talk about energy, and then I'm going to share my screen. The question was, so energy in general, we hear when energy prices collapse, that's really bad for the global economy because there's no demand for it. It means economic activity is either decelerating or in fact declining. And then when energy prices really get going to the upside, we hear, oh my gosh, the economies are too hot, demand's too strong, it's inflationary, and high energy prices are going to tip us into recession. Both are sort of true, although I think the pundits and the media overstate it and don't let normal supply and demand work. Yes, when energy prices collapse and there is no demand, sure, there's just a problem with global growth or growth somewhere. And if energy prices get too strong, like we saw, July of 2008, crude oil was $147 a barrel, $147 a barrel. Did that alone tip us into recession? No. I think, that's the misconception that one commodity can do that kind of damage. It was an important, sure, but it took all the way to 147 before crude oil rolled over to the downside. Of course, we had a horrible backdrop in July of 2008 when energy was 147, with the entire financial system beginning to fall apart. Fannie Mae, Freddie Mac, we know about the bond rating agencies, the mortgage crisis, all these things were happening in July of 2008. So it wasn't like 147 crude oil is going to collapse our economy. Now, what happens is with most commodity prices, the higher a commodity goes, the more likely the average American is to find a substitute. So if you were heating your home with home heating oil in the winter of 2007, and as they started getting going in 2008, you were probably contemplating converting over to natural gas, a wood burning stove, pellets, or all of the above. Perhaps you go to solar and do electric heat. There are certainly a lot of alternatives. And the same thing goes here. So right now I'm going to share my screen. I think I'm going to share my screen. Yes, I am. And oops. So here you'll see the price of crude oil. And crude oil is roughly $80 a barrel right now. And you can see its progression. I'll make it a little. So here's 2021. We began at roughly 45, and now it's on its way to doubling. But let's not forget, the economy is still humming. Yes, we had that Delta deceleration of growth, the Delta variant of COVID. But overall, the economy is still in super good shape. From my seat, I am just finishing up my Q3 report. I think I'm pretty early, which as soon as I get it out to clients, I will share it with everybody. So yeah, does crude oil matter being at 80 bucks a barrel? Yes, it does. However, it's more important for the economy that crude oil is strong than the drag on consumers like us. Will we survive with, gas at the pump at $4? We'll survive. It'll be a tad more difficult, but don't forget that there's so much money in the system. The government has sent checks and there's trillions sloshing around. It feels like, quote unquote, everybody has money. So crude oil skyrocketing and gas at $4 a gallon is not going to derail this recovery. I have very high conviction. I feel strongly about that. Interestingly, y'all may remember in April 2020, crude oil one day closed at negative, what does my chart show? I think it was negative $40 or $38 a barrel. The same day, a very well-known high-profile commentator said, this is going to be the norm, that there's a glut of oil and the ships are all offshore. Nobody wants them because they can't make money. And anytime you see crude oil rally, it's going to immediately go back to negative as we approach monthly expiration of oil, blah, blah, blah. And when high-profile people make those kind of outlandish, bold statements without any data to back it up, that usually is a turning point. And not only did I pound the table right then and there and said crude oil was a buy, but in my own house, I bought 2,500 gallons of home heating oil for $1. I think it was like $1.33, $1.34. So I certainly back it up with my own spending behavior. I'm not a dummy. I don't want to waste money on anything, let alone crude oil when it collapses. So again, that was the perfect reversal point. And now we're back to, here. It's had an amazing run. It's up $120 off of that funny low, and high profile, sell people make comments without any basis and they end up looking like clowns. And that's the problem. I can offer opinions. You've got to have some kind of data or model to back it up, which still can be wrong. Don't misunderstand me. My stuff is wrong. I've been wrong more times than anybody on the face of the earth. 32 years doing this, but so crude oil anyway, 80 bucks a barrel, probably going higher. Could we pull back first? Of course we could pull back because crude oil has an inverse and opposite relationship with the US dollar. Usually when the dollar is strong, crude oil is weaker because crude oil is priced in dollars. Here is the US dollar. Currencies are very small movers. So this does not look from, 89.5 to 95 like a big move, but roughly a 5 or 6% move in a currency is enormous. That is an absolutely enormous move. And the currency market's the biggest on earth, then the fixed income market, and then the equity market. So this is big. And I'll say this. We had an absolute collapse in the dollar in 2020 after everyone ran to it during COVID. It was collapsing because the market sensed this QE infinity was going to be massive, unlike anything around the world. And it was. That's why the dollar just went down, 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 down. And now, early in 2021, the market started sensing the Fed was going to taper and get rid of it. And the dollar started rallying. Interestingly here, crude oil has rallied in the face of a strong dollar. That just shows you how strong underlying demand is. If crude oil is rallying because it's priced in dollars at the same time the dollar is. Very unusual and worth noting that the rally in crude is even stronger than it looks, and it looks amazingly strong. And gold, on the other hand, which is also priced in dollars, gold has behaved more like you would expect. As the dollar has gone up, gold has gone down. That's the normal relationship. So, frankly, gold traded horrendously, and people are trying to assign a variety of reasons. Just look at the price of and the value of the dollar. When the dollar goes up, gold usually goes down and vice versa. So you need the dollar to peak and then begin to tail off for gold to get a strong foundation, strong demand. Do I think it's coming? Yes. Do I think it's coming now? No. Soon, but soon as it's just giving me cover in case I'm laughably wrong. But there's no sign yet that the dollar is turning to the downside and gold is going to all of a sudden take off again. I do think gold is eventually going to all-time highs, at least $2,500 an ounce, even $3,000 an ounce. We are nowhere near that launching pad yet, but I will certainly talk about it when it comes. So with that, anything else I want to cover? I'll pull up a chart of the stock market as I close because I'm going to go down for breakfast. Here's the S&P 500 from the COVID lows. Obviously, we've had this meteoric rise. It's been fun. I've enjoyed it. I've giggled. I've laughed. But here's this year. And we see this is the first 5% pullback we've had since October of 2020. That's okay. No problem. We're certainly overdue, but no big deal. Could it turn into a 6 or 7 or 8% pullback? Sure. Would it be, is it healthy, normal? So far, no real damage has been done. The pullback is healthy. It's normal. It's routine. And I am definitely a buyer on weakness. And I said it a number of times, this was the strongest low in early September. And now we had a nice little rally for a week. We've come down, we bounced again, and now we are kind of in no man's land. I said all along, I've positioned risk on meeting for higher prices. However, I did not have the strongest conviction that the low we saw at the end of September was the low to launch us to new highs again. I still don't. I think there could be one more breach of this low in all the stock market, not all, but a number of the stock market indices. Maybe we have one more decline next week, this week, week after, sometime this month, a little bit lower than we saw to new lows around where my arrow is. And then we go back to new highs sooner than later. That's my thesis. Do we have to go down and make a new low? We do not. But that's the kind of feeling that there's plenty in place that if the low is already here, we can go. But I'd love it if we've had one more breach and a lot more things would line up. We'd get a lot more firepower and then we could go again. I do think the next rally is going to be broad-based. I think it won't be just the technology. I think it's going to be certainly technology and banks and financials and industrials and materials and transports and energy's already run. So I do think the next rally, value leads growth, small caps take off. If I'm right, this should be a lot of fun, the next one, because if you're in equities, you should be able to make a significant amount of money. It won't be that really narrow where if you don't own 6 stocks, you don't make any money. So with that, I will say, I hope you're doing well. Hope you're staying safe and sane. If you like the video, please give it a thumbs up on YouTube. And I am flying back tonight. I will hopefully publish a blog tomorrow, assuming I don't get delayed or canceled, as we know what's going on in the airline industry. So with that, let's stop sharing it. You can see my ugly morning face again. And I will say, have a good day, stay safe. And as always, thanks again for watching. Bye-bye.